The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
For the first time since the 1990s, Canadian home prices are negative on a 5-year basis. I mean, we're dating it back to here at the peak of 2021, 2022, where, hey, prices have been kind of dropping here in the last several years. Several implications about this. It's harder for borrowers to refinance or extend their amortization, not offering any payment relief. I've had a couple of clients where we were looking at refinancing or taking extra money out, but we couldn't do it because the home value has gone down and the number, the appraisal value came in lower, and we can only refinance to 80%. And the 80% number is lower than what we're looking for, so we couldn't do it anymore. Welcome to episode 81 of the Canadian Mortgage Show. Alex Pang here alongside Alex Shanks. Alex, your hair looks a little bit,
I know you thought I got a haircut. I haven't got a haircut, Alex. I just shoved it up because I haven't had a shower yet today. So I made it. It looks a little slick back there, so it looks like I had a haircut.
Nice. And right before recording, I was telling Alex, you look really clear and your audio is amazing. So you're
Well, I'm using a different laptop, and I guess Riverside, like the software we use, it works differently on a different laptop. So if I'm clearer for you, I'm happy.
Awesome. I mean, spring is here, but it's still cold. I don't know about you on the island, but it's like I still have to wear a winter jacket at night, and I'm in the in between. Like, it's too hot for a winter blanket, but it's still too cold for my spring blanket. So I'm trying to get I got happy.
I was wearing my jacket before because I'm in my office, and usually you say something on my jacket, but I was like, oh, I won't wear my jacket today for Alex. I'll look a little bit more normal for him.
Yeah. We're kind of in that, but it's, I feel that spring is in the air. I haven't taken off my snow tires yet, which I need to do. But because we had the late March snow, I'm like, normally it doesn't really snow in March, usually February maybe, but spring is here, sun is out. I want to go back to golfing soon, but
Yep.
What's going on our show this week, Alex?
We got some jam-packed stuff here. It's I think the next, we got some pretty cool guests coming, honestly, the next 2 weeks. We got a really awesome guest coming in next week. I'll let you talk about him. We got another one, ideally the following week. And so I'm excited for both of those.
Yeah, I've been keeping this a secret for a while because I didn't want to jinx it, but I think it's safe to say that he's coming. So we have the author of The Wealthy Barber, David Shelton, former dragon from Dragon's Den, is coming on. He's recently updated his book, The Wealthy Barber, to this generation, the 2025 version, and he's made his rounds on the pod. And I was talking to Alex, hey, let's shoot our latest shot. Let's go ask the latest hot girl out. And so, happened in January, and he's been a busy guy, so finally been able to get a hold of him. So we are next week we'll have him on. So excited about that. But who do we have on next week, Alex?
The following week after, we have AJ Marina. He's I call him an economist by now, but he is a realtor from Ontario. And it's, again, kind of like how Alex and I met, is from TikTok and social media. And he just does absolutely amazing videos. He nails inflation numbers, like the budgets, everything. And I think it'll be an awesome conversation. He is a realtor, but I'll tell you this, he is not bullish on real estate in Ontario. And so it's going to be interesting to chat with him just about economy and everything. Dave Shelton will be more of I think helping just everyday Canadians with budgets, talking about what to do that way. And then with AJ the following week, it's probably going to be more of a less exciting podcast of news. It's more going to be probably shitting on the economy.
Hey, we do that all the time, so it's nice to hear someone else doing it too. It's like, Alex, why are you guys poo-pooing all this stuff? Why do you guys bitch and complain? we're not the only ones. We just call it as it is. If there's something positive to talk about, we'll give its flowers, but lately it hasn't. So, hey, we're being honest about it. All right. So, but yeah, we have exciting shows coming up, but we got to get through today. I mean, the last week or so, we've been preparing our audience about it that, once this war in Iran broke out, bond yields shot up. Hasn't happened the first week, but there was momentum building and it finally did happen. Um, you know, rate exceptions are gone. Um, I was able to squeeze in some rate holds, not the greatest in like the low threes, or sorry, like the high threes, like the 399-ish variable and stuff. But now everything's north of 4. Variables even went up. It's not that the bond yields going up affected prime rate, but lenders, they're gun shy now.
Yep.
They have reduced their rate exceptions and because of market volatility. And we're seeing variable now even in the low 4s. And fixed rates now are in like 4.5 to like 4.75-ish.
Yeah.
I'm like, holy crap. I mean, in retrospect, if we talked about this 2 years ago when rates were 6.5, I'd be like, wow, that's amazing.
Exactly.
Now rates have come down. We're like, oh, it's not that.
I mean, that's like again, like I was fine with like 4.3. Again, like that's like a healthy market. Again, like what Alex is talking about here, these are more conventional mortgages, not insured. If you're putting less than 20% down, you are still a little bit lower than that and everything. But it is a stark difference. I have clients that bought places like 6 months ago and they're like, Alex, I want that 389. Well, that 389 doesn't exist here now. We did get some rate holds in. I think I sent out last weekend 95 different things out for people and I think I got a couple down in the 384s. And so nice that way. But the thing I hate about rate holds, Alex, as well, now it also puts pressure on you of now you're scared of like, I got to buy something in 120 days. And what people have to remember, it's not just putting an offer on a place, you have to close on that place within 120 days. And so I don't love it because it also puts pressure on people. And I don't believe like that's where the market is right now. You do not need, again, I'd be fine with having a 4.5% rate if my purchase price was less. Like, I think people need to not fixate fully on that rate. Obviously, hey, if everything else aligned, you want that lower rate. But I don't think people should rush into anything.
Yeah, I totally agree with you there. Just to save, I mean, what, 0.2%? Should you rush out and buy something that like you rush in and you end up regretting? No. I mean, obviously try to, find something. We're in a market right now, wherever you are in Canada, the market's soft. Other than Alex on the island where it's a unicorn economy, I don't know. There is no rush. So if it takes longer than 120 days and you don't get the rate hold, hey, at the end of the day, those rates are, whatever it is, it's just a temporary being for whatever the 3 to 5 years that you have it is going to change. The place that you buy, if you're buying to live in, you're going to live in it longer. So you're once the mortgage is done, you're going to forget about it. Like your budget is set for whatever the payment is, but you're going to live in that place every single day. So don't rush into something just to get this rate hold.
Exactly.
Obviously, because this market is on the buyer side, you have your time. You can take your time.
Yeah. The hard one is the people that were up for renewals, Alex. And that's where most of those people, I got stuff secured because, hey, they have to do something that way. But it's also hard, like the people that were maybe 6 months out, 8 months out. I even had a lot of people saying, hey guys, like I would call and say, what would an early renewal look like? Again, a lot of people are scared of, I don't want to give up my 2% rate 6 months early. Tell you this, guys, you'd rather give up 2% for 6 months than have a 4.5% for the next 5 years compared to say 5%. Like that's where people just, they look at the lowest number and they're not calculating what's going to look like on the other side. And that's where I don't think people need to like rush into it today to redo their mortgages. But again, you want to know what that looks like.
Absolutely. Yeah, I mean, we hope that this war in Iran ends soon. And just because, let's say, if it ends in a week, doesn't mean that all of a sudden the rates are going to come right back down. Just like we rocket to the moon and always parachute down. The same thing that happens with, like oil and gas prices. I mean, in the lower mainland, it got as high as 214 last week.
Yeah.
And I think it kind of pulled back down to like 208 today. And it's not like all of a sudden oil prices drop 10%. Gas price is going to go back to $1.80, $1.90. It's going to slowly come back down eventually over the coming weeks and such. So yeah, that's just the world we live in.
Yeah, I mean, we got one, and again, this is Ontario now trying to do something for new builds. Again, it's not going to move the needle here, but the Premier Doug Ford just announced that Ontario is extending the HST rebate to cover 100% of the tax on all new primary residents under 1 million, and a percentage of it that for 1 year. Again, like these are things that are just like they're not going to move the needle. And I think I saw a post actually recently about even for new builders, they're like, this actually pushes us more to be like, we're just going to rent our places. We're not even going to sell them. We're just going to turn into rentals.
Why do they say that? It's making it more affordable from the buyers, or
Yeah.
they need more than that, right?
Yeah, I think it more, again, obviously, like the price point like has to be in the right spot. So like, do they want to drop the prices to hit that for the HST? And it depends on this. The hard thing again are the builders going to front it? Like, do they have to give the money back? And then the government, like, there's no real setup of like who's giving the money up front. And so that's where I think a lot of builders like, you know what, we're just going to turn stuff into rentals. And I mean, think of it like back in the day, there wasn't much subscriptions thing there, Alex. Like, think of like you could do so many things of just like, oh, I'll pay one time, till a lot of people realize like, ooh, yes, subscription like upfront cost is maybe lower, but when you have someone in a subscription, like they're there forever. Like you keep them, and that's where if they looked at it like, hey, well, I make more money renting this thing out for 35 years than actually just trying to sell it today.
Yeah. So, I mean, more details about this announcement. I mean, the rebate of 130,000 actually goes all the way up to 1.5 million, and it scales. It phases out up to 1.85 million, and people qualify for a $24,000 rebate. Now, it's good for housing affordability, but like Alex says, probably won't even make a difference because it still costs more. Without the HST, it still costs more than the comparable resale across the street. Um, I mean, other pundits in the industry have said the same thing. Like, you're gonna have to lower development charges. You're gonna like, it's great that this has happened, but more needs to happen to make this more affordable. Like, you need to lower development charges to make a significant difference, like Mississauga and Vaughan have already done. Um, I mean, even a few weeks ago, the Ontario government they're providing capital to buy unsold units in bulk, which, if that sounds familiar, Alex, isn't it just like bailing out the developers?
I mean, that's pretty much what we're doing here. This is not, why don't we do something of like, hey, let's increase the first home savings account to 100,000. Like, let's do something that automatically helps them. But like this only helps the developers, does do nothing for an actual buyer.
Yeah, it sounds great, but is it really going to move the needle? Probably not. I mean, yeah, we'll see. We'll see how it goes. This is talking about home prices here. For the first time since the 1990s, Canadian home prices are negative on a 5-year basis. Now, if you look at the graph here, I mean, we're dating it back to here at the peak of 2021, 2022, where, hey, prices have been kind of dropping here in the last several years. Now, there's several implications about this. It's harder for borrowers to refinance or extend their amortization. Um, you know, not offering any payment relief. I've had a couple of clients where we were looking at refinancing or taking extra money out, but we couldn't do it because their home value has gone down, and like the appraisal value came in lower, and we can only refinance to 80%, and the 80% number is lower than what we're looking for, so we couldn't do it anymore, or whatever. So they could only do it like a renewal or switch, and it made sense to stay with the lender. Other things like that, and like it goes on to saying other things like it's harder to switch lenders, which I just mentioned.
Now, I will make sure people like, listen, I'm going to give people some tips here. Like, there's a difference of insured mortgages. That's when you bought it with less than 20% down. There's also insurable mortgages, and there's ways you can only get an insurable mortgage normally when the purchase price was less than $1 million. Now, if you do it correctly with the lender, even if you bought at 1.1, The value is now down. If you go to the right lender and you show the price today, they can do an insurable switch. So you are able to move your mortgage if you need to, but it has to be done in the right way. And that's where what we have is called monoline lenders. These aren't banks. They're able to do these type of things. And that's where this is where they can do very good things. You don't have to qualify. You get to qualify at the contract rate. You don't have to stress test. Like, there is ways, but it's just going to be tricky. It's not as easy as it was before.
Yeah, I'm finding that contract rate thing is not too much of an issue for a lot of my clients. I think what I'm finding the biggest issue is property values are down, so there's less equity to be available now. Like especially the last few years where people have accumulated debt and they're looking to consolidate and such, and because they've accumulated debt, we can't debt service it because now they have a car loan. And in order for it to work, they need to pay it off, but there's not enough equity to cover the car loan. So they just have to end up renewing with the same lender. So which means lender doesn't always give them the best renewal terms. They know they have them at a rock and a hard place. So that's kind of the implication that we're seeing here as well. I mean, not everybody, but it's happened a few times with my clients.
And I mean, it's definitely worse in Vancouver and Ontario for sure. That is like, and that's
Yeah.
again, people that are closing on new builds. Maybe they planned on doing a 20% down payment now. While the values have dropped, they're now having to do an insured purchase. Again, we've talked about it before. You got the blanket appraisals, but that doesn't always work depending on the lender you're with and everything. And so you have to pivot and say, I'm actually going to put 20% down, less than 20%, so I can finance higher.
Yeah, and that way the insurance will cover it, no appraisal needed, so you can kind of avoid the appraisal that way. It seems like any deal that you and I do these days is let's try to do this without involving an appraisal, right? Anything that involves an auto appraisal or something like that, you don't have to refinance up to 80%, or as long as we go to 75, we don't need to do the full appraisal. It can be a desktop and we're good to go kind of thing. So
Yeah,
we're having to adapt in our industry.
that's definitely, it's not a worry on the island. But if people are buying elsewhere, I'm like, hey, we got to get your appraisal done here.
Yeah, yeah, exactly. So, I mean, like I said, less equity means, I mean, fewer trade up buyers, and you know, uh, the liquidity is not as rampant or as available as was before.
Now we're talking. This is just going into the economy and everything, which is this is where we're in such a weird spot. Fixed are going up. What's going to happen with variable rates? And again, this is just more data of saying what's going to happen here. And the federal government is cutting up to 12,000 plus full-time employees. This is over 2026 to 2029. They kind of break it down between public service and procurement: 1,700, Health Canada 942, StatsCan 900. Actually had a client, Alex, come, and he was getting pulled. He was actually getting pulled. I was like, holy shit, man. I've never He answered the call because he thought it was someone, and they were like asking him. I'm like, I've never been pulled in my entire life.
Wow, wow, yeah. And all these times that we see these reports, these Angus Reid polls, all that stuff. So they're all by phone, or is it by email, or how do those polls work?
Yeah, it was a phone call, and it was a real person asking questions, and he just said, hey, I can't talk right now.
Oh, I see. Okay.
Yeah.
Okay. Well, yeah. I mean, large of these. I mean, we've long talked about how our governments have a lot of bloat, and 1 in 4 Canadians that are employed work for a level of government. I mean, aside from the human element of job losses suck, yes, but we all know that governments are highly inefficient. So, sucks for the people losing the jobs, but good for government spending because we are what projected to be 78 billion in deficit. So, hey, got to give our flowers to Carney there, trying to be more efficient, using AI and program wind downs and such like that. So, speaking of being more efficient, we have a auditor general, basically a fancy word of saying internal affairs, uh, uh, you know, looking at our programs here. And the biggest one that she was blasting is our international student program, for failing to address integrity concerns. So her report found immigration department began with 4,057 investigations, but only 41% of these cases could not be closed because of a lack of response from students. Now, she says, going on saying over 150,000 potential cases of non-compliance with step permits were identified, but the department only investigated a small number. Also did not pursue 800 cases involving fraudulent documentation discovered after the permits were approved. And she goes on to saying that the likelihood of it's unsure the amount of students actually leaving once their permits expired. So
Yeah.
I'm gonna put this out and on a reacher. Likelihood is not a very high number that they actually left. So we have a lot of like legal immigrants here staying in Canada, right? Because we don't have the resources like ICE to deport and stuff like that. So
And again, I mean, like,
we're just hoping
it's
that they
also
leave.
like, and again, like, should we BT port them? It's like, no, but it's also like our government should have done a better job up front. It's been like, hey, like, you're like, this is when you're finishing school and stuff. Again, like, yeah, it's just where and now we've cracked down so hard. No more immigration. I saw another thing, more universities having to cut staff and everything because their revenue's down by 20 million. And it's just like all this stuff. It was all of all of Canada was funded on real estate and immigrants. Like that's pretty much everything we've been funding it on.
Yep. And the what was it? Those diploma mills were it was funding that,
Yep.
fraudulent immigration consultants, real estate was going crazy, rent was going crazy, and even, hey, car dealerships were making hand over fist because a lot of money was coming in to people buying cars and all that stuff. But the party has stopped, and this is the fallout of it.
And that
Like,
I was gonna say, and I mean the federal government just admitted it. A Department of Employment memo confirms that an 18% jobless rate for Canadian students was caused by a large number of foreign students. I mean, like again, how would no one have realized that? Like, hey, we're gonna bring a bunch of immigrants in. They're gonna be doing work that's gonna take away from like what we used to have as youth student jobs. Like, I just and again, I'm not in the government. Maybe in the government is something different. There's different information, but I mean this is where I'll be interested to talk with AJ about this because like we have access to the same data that they have. He's able to map stuff out same way as they can, but he can do it by himself compared to 5,000 people. Like what are we doing?
I know this whole time when we had Ministers Sean Fraser and Mark Miller spent years saying that immigration had nothing to do with youth unemployment. I'm like, I don't know about you, but like, are you seeing the same data we are? Like, what kind of spin are you trying to pull here? So, here's an interesting one. I mean, Canada is going to be one of the host nations for FIFA, the FIFA World Cup. Now, Doug Ford and the Ontario government is looking to ban above face value ticket resales in a bid to crack down on price gouging. I mean, sounds great in theory.
No.
Do you think it's easy to enforce?
No, I don't know. I mean, like, I don't really understand how that can be enforced. I mean, other than like maybe can you say like, let's say when you pass me your ticket there, Alex, like I mean, you wouldn't have given that to me unless I say if I'd given you a bunch more money or something. Well, do they have to ask like, hey, what did you pay for this ticket? Like, I just don't know. I don't know how they're ever going to be able to enforce that.
Yeah, and at the same time too, like when people buy tickets, there's a portion that Ticketmaster takes their cut. So when you're looking at the face value, are you looking at the actual ticket or the ticket with the Ticketmaster surplus, like the fee on top, like what the consumer actually paid? I mean, sounds great in theory, but like good luck trying to enforce that, like especially when we are kind of hurting for resources and hurting for money in terms of trying to wind down government bloat. I mean, I can see them dedicating a lot of resources for this, and what would that do? That's going to increase the provincial deficit, take resources away from other areas. I'm like,
Yeah. And that's I mean, like even like online, the tickets for the World Cup were absolutely insane. And it's like and so yeah, like it's just not hey, it would be nice that they fix it. But again, like it's buying anything. If you buy a house and you've done work, the value increases. Like if you buy something before someone else can get it, that's why the price is higher. Like it to
yep,
me,
the law of supply and demand.
yeah, like I just don't know. Like it's yeah, I don't think it's gonna fix anything.
And, for those of us out there, it sounds great, but there's bigger fish to fry. Can you not deal with affordability? I'm sure Ontario, like, the infrastructure in roads and why it takes, was it like 15 years for an LRT to be built, or, consultation after consultation, like so much, like that sounds great, but I think your resources could be better spent elsewhere.
Yeah. And now, I mean, we got something that we're talking about the price of oil and everything that we're doing, trying to make it more here in Canada. And the Canadian Natural Resources, one of the largest independent crude oil and natural gas producers in the world. Now, this is here in Canada. For some of this will pause their 8.25 billion of oil sand mine projects because of the regulatory uncertainty. According to them, the federal industrial carbon tax has created uncertainty and economic burden for a long-term growth investment. Again, I want us to be like environmentally conscious here. Like, I don't want people to think I just want them to get to do whatever the hell they want. But we already have seen like the oil sands is some of the cleanest spots ever. Like, let's not talk about, again, we're always comparing of what we're doing here. And even if we did 50% of what we do, it is 100 times better than anywhere else in the world. Like the stuff that they do and everything is horrible. And so we are very good and we can keep being better, but if we want to start producing more, we have to do it here.
We've long talked about how taxes, this industrial carbon tax, are they actually doing it to help the environment? I highly doubt it. We think that this is just a cash grab. It's just a way to raise money, to not raise income taxes, to not raise property taxes, and say, oh, we're just gonna combat climate change. I'm like, this ain't doing shit. So this is just, lining your coffers, making things more expensive. Let's just call it what it is. And it's definitely
Then, I mean, like, let's talk about the oil and everything that's going on. I would say, Alex, like these oil companies, they're not upset. Like, yes, maybe they're the less of their product is going out right now, but they're getting more money. And that's like, there was a report back in the day. Some of the the biggest investors of the green initiative was actually oil companies. Hey, they saw that obviously oil, everything, the use of it is going to slowly go down in our economy and everything. So what do they do? Hey, let's make it look really bad. And we'll make our demand for it go up. Our price will just go up. Our supply will go down, but the cost of it's going to go up. And us as Canadians have done it to ourselves. We have made it so our prices are more expensive, and also it's harder for people to get it. So why would they not go buy from somewhere else?
Yep, we're on the same boat there. So I mean, we need to get over ourselves and make it easier, because we are such a resource-rich country, and because of the whole, like, the Trump thing, the whole having to find different trade partners. I mean, because the fact that we're so bogged down by bureaucracy, this is what's hurting our productivity in Canada. You know, we've already talked about like this growing deficit, and but here's the interesting take here. UBC professor Paul Kershaw says that if there's any changes to OAS, old age security, it could help reduce Canada's projected $78 billion deficit. Now, he argues that current income threshold for phasing out OAS benefits is too high. See, under the existing rules, retired couples earning up to 185 grand annually can still receive the full benefit of a roughly $18,000. I don't know any seniors that earn 185,000 combined annually. Do you?
Yeah, I mean, if they have old businesses and investment incomes, I do. Like, I've helped clients that have that, and again, that's where the hard thing. And this is, I even struggle with this, Alex. As business owners, we get to do a lot more things. We get to manipulate our income how we want it to look. I could pay myself the least amount, and I get all the benefits. Get more for childcare. Get better dental benefits. Like, it's great how we do things, but it all curtails to business owners, like everything. And that's where on this, like, hey, again, should these people be getting it? Maybe not, but they've also been paying into it their entire life. So like, it's such a hard thing. Should the number go down? To me, probably.
Yeah, yeah. I mean, there's only right here, his study shows that only about 4% of seniors are excluded from receiving OAS due to high income. And a new poll done by, again, we talked about polls, a poll by a research company suggests Canadians are open to changes. About 70% of respondents said OAS payments should be reduced for retirees with six-figure incomes. The proposal includes lowering the household income eligibility threshold from 185,000 to 50,000. Like what we talked about. A move Research Co. estimates could save roughly $7 billion annually. Now, just over 60% of those surveyed believe the OAS threshold should be the same as is or lower than the 81% cutoff used for this Canada Child Benefit. Now, I'm interested to find out, of the people polled in this study, how many of them are seniors? Because I'm sure all the young people will say, yeah, absolutely, get rid of it, right? Do you think those who are seniors are okay with that?
No.
I wonder.
No, they're not. Like, unless they're very well off and they're like, hey, we want to do it. But again, like, it's such a hard thing to say, hey guys, you paid into this thing, but hey, guess what? You're not going to get it anymore.
Yeah, I mean, it's almost like, boomers, you guys experience all the benefits, but our younger generation is hurting. We need to kind of give up the benefits you have to help the future generations. And who knows? I mean, both the Professor Kershaw and the research company estimate that broader reforms could generate up to $20 billion in annual savings. Now, I can see if that ever happened, there could be mass rioting. But I do agree, we need to do certain things to reduce our deficit and just to cut our spending, and such here.
Yeah, and that's now we're moving into Manitoba is going to be removing PST from all groceries. Most basic grocery stores in Canada are tax free, but the moment consumers trade down to convenience snacks or smaller portions, often due to shrinkflation, they're then enter fully taxed part of the store. And so I mean, again, these are not make it or break it things. Like, this is not going to move the needle on anything. It's not going to be like, oh, I can now go and buy more groceries today.
There's a lot of things already PST free, so it's be all the packaged goods, and yeah, I can see more and more Canadians now buying packaged goods. It's cheaper than fresh fruits and vegetables.
Like, that's
Like, go to the dollar store for food.
and let's talk about that. Like, we were forcing people to eat crappier foods, and even like bacon is now, it's known as a class 1 carcinogenic. It's like, well, why are we make people pay a lot more money for healthier food, and we say, like, we could save our medical system billions of dollars of, like, hey, what if we made it more expensive to buy bad food? Maybe increase alcohol prices. Hey, cigarettes, they have an actual, let's call it a carbon charge, but it's a health charge. Like, that is stuff that actually could benefit us. It's going to benefit people in health and also benefit our economy. But again, those are corporations. It's never going to happen, because then they would make less money.
Yeah, so we'll see. I mean, it's good for Manitoba to remove that, because we all know that less taxes for us Canadians, the better. Speaking of which, and funny enough, Dollarama has forecasted slower growth in sales ahead. They're signaling a potential shift in consumer sentiment. So this got me thinking, when a dollar store is struggling, the economy is not doing well, because
Yeah, I was going to say, I think we've
times,
their prices were going up, and you were like, oh, everyone's converting to there. And that's like, oh, if it's actually going down, that's extra bad.
yeah, because most of the time when the economy goes bad, people shift to the dollar store because things are cheaper. And I even was talking about this with my wife, like, shoot, the fact that they're actually making money still selling this for $1, that means they're buying it for like pennies on the dollar. Like, holy crap. And the fact that even them seeing sales is like, people aren't buying anything anywhere. So, I mean, that's kind of a sign of the economy there.
Yeah. Now, this is where we're talking about some tariff stuff here in Canada with China and everything. And Lotus is set to be the first Chinese-built EV brand to enter Canada under that new 6.1% tariff quota. They said Canada could help offset sales hit by paused exports in the Middle East. And on there, I thought Lotus was Chinese. I see you put notes in there that didn't know Lotus was Chinese. I thought
I didn't. Okay. Yeah. I remember there was a car there that back in the day was a little car called Lotus Esprit. And I'm like, oh, that's a really cool car, but I didn't know there was actually Chinese made. But I mean, the next one here, like, we're actually kind of excited because BYD is planning 20 Canadian dealerships within this year. As this tariff deal opens up the floodgates, we're seeing planned cities like the GTA, Montreal, Calgary, and Vancouver. And they did say that most cars will be under 35K. I mean, the fact that they are coming in, I've never actually considered EV because of the price point being so high, but the fact that they're coming into the market, forget the whole Chinese thing, but the fact that there's more competition and more options available at a lower price, like we would actually consider it. Like, ooh, like my wife was looking at the BYD cars that have the karaoke machines inside. I'm like, well, that's crazy. It's totally a gimmick, but it's so cool. Like you've seen this
Oh yeah,
on
I mean,
social with
like
the cars that rotate or the lying flat seats or whatever. It's like, the crazy tech in it.
and price point again, like everyone's gonna say, "Hey, I don't want to buy this stuff because it's." I was talking to my parents. They don't go to Home Depot anymore because they are trying to only support Canada. And again, well, they go to another store, and I said, "Well, what's the price difference?" They said it's only like a few dollars. Hey, people are willing to do that, but when you talk a very wide price gap, well, people aren't going to do it. They're going to say, "If I can save 25,000, sorry, I'm buying a Chinese made vehicle. I'm not going to buy the one built in Canada." And that was always, and I mean, I think the Canadian government and automakers know that. That's what they're so scared of these vehicles being here. But the problem is like, well, then maybe we need to make our cars cheaper. Like, why are our costs so expensive?
Yeah. I mean, we've long talked about Canadians are political. We will support Canada until it hits their pocketbook. Until like, even with gas being cheaper or more expensive at 2.14, I'm like, shoot, honey, I know this is not what you're gonna like. I'm gonna have to go to Blaine and fill up gas because I did the math and it ends up being 20% cheaper. And I'm like, sorry, man, like
Or I'm doing it. And that's the exactly that's yeah.
we gotta do this. Yeah, like, so I mean, I can definitely see BYD and Lotus, like other cars taking over, slowly taking over market share from Tesla. I mean, I was never interested in EV, but I might actually consider it, the next time I look at a car. But you know, and interesting note, I was like, BYD stands for build your dreams. I was looking that up on social and like, oh, okay, that's what it means.
That makes sense. Yeah. Now we're gonna bring it back to some local stuff here to talk about. Now, hopefully, these are some good things. Is that LNG Canada, Coastal GasLink signed pipeline deal? Now it's a MOU, doesn't mean it's actually happening. They've signed something.
Rebel use.
And bringing the projects closer to reality. I have a few friends that are working on some of these projects, and they're talking about the LNG Canada Kitimat, which is phase two. And the phase one has been going very well. Shell and partners are expected to make a final investment decision by the end of 2026 for second phase to double capacity. Again, I believe these are the ones that we already have, like these infrastructure in place. Like this is where we need to spend our money. Trying to build new things to me just doesn't make sense right now. The red tape and everything else. You got the Coastal GasLink expansion. Again, it's already there. LNG Canada's taken a lead role in designing capacity expansion for the pipeline. So again, like these are all great ones. The Key Limbs LNG, this is the one where I get a little bit hard because this is a brand new one. It is a proposed 12 million per ton year floating facility, which again, are we going to be okay with that? Like what happens if what if we have really bad weather? And so I don't fully know about that one. You got Cedar with right near Squamish there, a partnership with the Haisala Nation with the construction expected to peak in 2026 and floating components arriving in 2028. Like those are all happening. And then the power infrastructure, the BC government is investing in the North Coast transmission line to electrify these projects, reducing reliance on fossil fuels, which again, hey, we need to do that. And that's where we should be spending our infrastructure. But at the same time, the back in the day, the powers of B&B, so we're saying, hey, what was it? Was it 2028 that only electric vehicles were meant to be downtown, Alex? That I can't remember what they said, but we didn't have the power for it. We won't have the power.
Yeah. I mean, these are good things. I mean, MOUs are great, but wait till they, put shovels in the ground, boots to the ground, like MOUs to the moon. But like until you actually do something, put your money where your mouth is. But this is good news. I mean, these projects aim to establish BC as a major low carbon LNG exporter to Asia with the potential to create thousands of jobs and generate billions in tax revenue. So let's bring this back to a couple weeks ago when Eastern Canada got Australian LNG. If we can get Quebec to buy in, like we don't have to go around like I don't know. Is Quebec almost like another, like, along with First Nations, another special interest group that they want their piece in order for things to go through them? Um, like,
And actually, I did. We actually got to try. We got to try and get a guy on that is actually has a really good grasp on all that stuff on treaty land and everything, Alex. So I'll message you after. But just talking about that, like there's stuff and talking about reconciliation. This is not like the time that these Indigenous bands want to be doing this. They want it when the economy is doing good. This is like the worst time for them to be talking about this stuff because the economy is not doing good.
well, I mean, these are one of the things to help the economy going, right? Like, let's get things going to stimulate the economy, to get jobs, to sell our resources to the world. Um, People need to have longer vision than what's, the blinders, what's right in front of them. Now, there's some other news here. BC government has approved the expansion of an open pit copper and gold mine in the province's southern interior. There's a new Ingerbell expansion at the Copper Mountain mine near Princeton. And so this work is going to extend the mine's operation by 12 years, supporting about 800 jobs with most workers living in the area. So that's good news there. So it's projected that this mine will produce about 750,000 tons of copper, 25 and a half tons of gold, and 156 tons of silver based on current reserves over its extended lifespan. So that's good news. More jobs, more resources,
And these are all things that are very much needed for AI and the data centers and everything. So again, let's use our resources in Canada to help. And again, we should be building these centers in Canada. Let's not export it somewhere else. Let's be doing it here.
100%, 100%.
Now, this BC minimum wage to go up to 18.25. It's this. I'm thinking my first job I ever got, and it was $7.50. That's what I made, and I mean, this is where I know we'll talk with Dave Schulten on this. I always found it very funny the people I worked with. A lot of them would eat on at McDonald's still. I would buy like a can of Campbell soup for like my food. And like, why wouldn't you just get, I'm like, I'm working 8 hours for $7.50. I'm not going to use 30% of that just on food. Like that's not like, I always thought of like, hey, how long do I have to work to buy a new shirt? And at $7.50, I had to work quite a long time just to buy a shirt. And so it's 18.25. It doesn't, again, like you can't even buy, like that is taking, if you went and bought one, that's an hour of work to buy a meal at McDonald's. That's what it is. Like, hey, I just worked for an hour just to pay for my food.
Yeah, like, I'm older than you, Alex. So when I first started working, minimum wage was $5.50, and then I was like, when it went up to $6, I was making $6, and I got a raise to $6.50 an hour. I'm like, woohoo, I'm rich. But like, I worked in hospitality, and yeah, we got discounts on our food, but I never ate. Even with the discount, I'm like, shoot, like I see my coworkers eating, like, I'm like, screw this. I'm going to eat at home, man. Because even though it's 50% off, I came here to work and make money, not to spend it on food. So yeah, that's what I've always been doing those days. But they say that to keep up with inflation. But you know what that'll happen? That means prices will only just go up. Like our McDonald's meal will only go up, our pho, our Chinese takeout, every single menu item or thing that we buy will just go up in accordance. So it's not like the minimum wage workers are just going to get ahead. It's going to be,
Again, these are meant to be minimum. These are not meant to be jobs to sustain you for living like a regular life. This is meant to be, hey, this is your starting place so that you can get going. Like these jobs are meant to be for people that are still living at home. Like that's really what these jobs are for. They're not meant to be a job for you living and making that for the rest of your life.
yeah, yeah. So, I mean, we have a last couple items before we wrap up here. Talking about the whole EV thing. Now that Chinese EVs are coming in, a lot of the big automakers have decided to kind of like give up on EVs. Like Honda's push to EVs has led to the company's first financial loss in 70 years. They have written off about 15.7 billion. They're essentially canceling 3 planned EV models in the US.
I never even saw a Honda EV. What did they make as an EV? I've never even seen a Honda EV.
Yeah, I guess they kind of joined the whole the whole EV space, because, like now it's like the whole rise of AI, and you're going to see a lot of companies go to AI, and not everyone's going to survive. It's just going to be the good ones. Just like this trend where a lot of the automakers saw Tesla was like just this disruptor, came into the market and take huge market share, and everyone wanted a piece of the action, but it wasn't viable. Other people decided like, these aren't as
And,
good as
and
Tesla
again,
and all
a
that stuff.
very interesting thing, like if Tesla, I believe if Tesla tried to start today, the business would fail. It was just the right time and place for Tesla. People wanted that like super cool thing. For one, it got sold of like these are going to be autonomous like a long time ago. That's what a lot of people thought. Like, I'm going to buy a vehicle 10 years ago and it's going to start driving itself from a year. And that just keeps getting pushed. But I'd put money on it, which we've seen. What you got, Stellantis, 27 billion write down, Ford, 19 and a half, and GM and now Honda as well, that they've realized like people are looking at the price points. They're not going to go buy an 150K EV vehicle compared to 100K because that's the damn price of vehicles just to say that they're EV friendly. No, they're not going to do it.
Yeah, they're just too expensive. Now, I'm very interested to see how things go with the Chinese EVs with BYD, Lotus, and others when they come in at a lower price point, competing. We all want competition, and let's just forgo the whole Chinese thing about like, oh, Chinese spy. I'm like, dude, your iPhone is made in China. Your Samsung, I don't know if they're made in Korea, but a lot of things are made.
Oh, everything like that.
Worried about spying, like.
Let's just go back
We're not that important.
Like yeah, that's just to me, that is not like, yeah, that's always been. And again, like I kind of believe that's the fairy tale of even like with Iran and everything of like all the history you see of like, they're going to have nuclear bombs within 2 weeks. Like that's what's been spread since like 1960. I almost feel like it's the same like made up lie about China. Oh, they're going to spy on us and they're going to take us all over. It's like, I don't think we already give all the data to them. They already have everything that they want.
Yeah, and we're on social media all the time. TikTok is owned by a Chinese company. Facebook, when you talk about something and it shows up on a Facebook ad, they all know our stuff. It's not like we're not like intelligence like operatives with, like the country's military secrets or anything. We're just average people. They already know what they already know. Like, who cares? You're not that important. So, I
Did you see that one?
I rant about this all the time.
Do you ever read like I'm pretty bad at reading contracts, even when you like sign up for an app? Did you? I don't know the full story, but like Pokemon Go, what people were using years ago and like taking like using the camera. Well, they sold all that information to another company, which using it for AI and data tracking now. And pretty much anyone that played that game pretty much gave billions of dollars for free because all that information, like Google had to spend billions of dollars to track their stuff for satellite. This company got it all from Pokemon Go for free.
Wow. Wow, that's crazy. I'm sure they just bought it for the data.
Oh, 100%.
That's how we go.
Yeah.
So one last final fun item that we want to talk about. This came through our socials in the last few days. Since the whole tariff thing, a lot of Canadians have decided not to travel to the States. And one of the cities in the States that focuses or they rely a lot on Canadian tourism is Vegas. So we talked about it a few months ago or a month ago where, a Vegas hotel was, allowing Canadian dollar at par. Now here's one. MGM Resorts is launching a true all-inclusive on the Strip starting at $330. I'm assuming it's $330 American for 2 nights for 2 people. So it's 2 nights at the Luxor or Excalibur, 3 meals a day, 2 show tickets, a coaster rides, and free parking. So they're that hurting for business that they are just saying, please come in. Would you book this deal?
I mean, back in the day, I would say yes. Now I don't. Me and my wife, we were meant to go to Vegas for her 30th birthday. She's turning 36 here next week. I turn 35 on Sunday here. And it's kind of past the point. I'm also not drinking alcohol anymore. I don't like to gamble. So like the only thing I'd go to Vegas for maybe is the shows. Like that's pretty much the only reason.
Yeah, and like the last few years, I think Vegas has priced themselves out. They've increased their prices on drinks. I'm like, I heard drinks are like, $25, $30 US. You go into these like, I don't go clubbing, but like if you go to a club, it's like $50 to get in US. And then, a lot of times they're like, you can't sit down unless you get bottle service, and bottle service is like $300 US a bottle, and and like in order to sit down, you have to spend like $2,000. I'm like, no wonder people aren't going anymore. It's like they got too drunk on the idea that people will constantly come no matter what. And as soon as the whole political thing, with Trump and stuff, and
Oh, Canadians,
people wanted to stay.
Canadian. I mean, Canadian, like the boomers in Canada used to fund the casinos in Vegas for sure. Like I call it at minimum 50% was Canadian there probably.
Yeah, same thing as Florida. Florida is even hurting too. The Florida governor is like, hey, we want Canadians, we're open for business. We love Canada. I'm like, well, you're president.
Yeah, the first figure I got.
Out. Yeah. So this is about close to wrapping up our episode. Alex, your birthday's coming out. Happy early birthday to you.
Yeah, I got a birthday. It's 35. I mean, it just kind of feels like another day. It's not like it's obviously when the 5 more years to that 40, and that will probably feel very different. But I'm playing in a hockey tournament pretty much every year on my birthday. I get to do that. So I'm excited that way. We'll see how my body holds up.
Hey, enjoy it while it lasts, because at a certain point, things are hurting, and then you might need to start popping Advil or Tylenol just to play, just to hear that enjoyment. But yeah, folks, continue tuning into our show, because we have some great guests coming up. David Shilton and AJ Marino.
Yes, I could be wrong on that, but it's AJ on TikTok.
Okay,
that's how I know him.
AJ on TikTok. Okay, sounds good. Folks, thanks for tuning in. As always, if you like our episode, like our pod, please like, share, and subscribe. And we will see you next week. Have a good one.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email, because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.